Canadian e-commerce software company Shopify is going public. The startup plans to list on both Toronto and New York. Shopify's technology is used by thousands of small and medium-sized businesses to create an online presence and collect payments and process mobile credit card purchases. The company intends to raise as much as $100 million through an IPO. Shopify was founded in 2006. It has offices in Montreal, Kitchener, and Toronto, but the majority of its staff are at its Ottawa headquarters. It's been growing rapidly. It raised $100 million in venture capital just last year. Shopify's revenue has grown exponentially from 2012 to 2014, but so far it struggles to turn a profit. Last year it lost more than $22 million. The last word on this goes to Som Seif, CEO of Purpose Investments. Great to have you here.
Great to be here, Amanda.
So what do we think about this? Well, this was hotly anticipated, lots of VC money in it, so we expected it to come to market. This valuation is how valued is this, and is it overvalued?
Well, let's not talk about valuation, let's say. No, I mean, look, this is going to be a highly valued business.
Yeah.
I think the last round that the private investors did was at $1 billion last year. And the talk is that it's in the $2 billion range that this IPO will get priced in. And that's a really wonderful thing, by the way. Not because of, is it overvalued or undervalued, because it's all about what this business is. And first off, I think Shopify is a really cool business, and I think it's a great opportunity. What the future of the company results in is what you really care about in this thing.
So let's talk about what it does and why you think it's so cool. Because when I read that brief description, you could understand people kind of going, that sounds like something Amazon does.
Yeah.
It's actually different.
It's actually quite simple. And when you get to it, so smaller, medium-sized, and actually they have some large players like Tesla, but smaller, medium-sized business wants to have an online presence and a commerce site. So let's say John Smith Cakes is a store and wants to sell cakes online. What they will do is they will partner. Shopify will build their website, build their entire infrastructure, and then effectively, the website will go up and they'll start selling their cakes online. And Shopify makes a percentage of every transaction. So they'll sell, just like Visa or MasterCard, a percentage, and they'll get that as an annuity long-term with that client. So as their client grows, they grow as well.
And obviously they're offering a kind of a range of services that makes them competitive with, because these days you can be part of the Amazon store fairly easily.
You can do that, and you can go onto Amazon's sort of front-face store, but this is actually, you own it yourself. So you have your own online presence, you have your own online business, and as you know, online growth in terms of e-commerce is going to continue to become a larger share of wallet, larger share of how people transact, and so it's really quite exciting for the company. If you think about it, they have hundreds of thousands, I think 162,000 customers today. How that grows is pretty cool. But it's just that vast annuity that will continue to grow as their clients continue to grow on an online presence.
Is it too optimistic to say this is a revival of tech in Canada? That we have a company valued at this level? Well,
I'd say a little bit. Look, tech's been alive for a long time in Canada. But what this says to me, this is a really important transaction for Canada, because for a long time, what happened, one, we had very little VC or venture capital money to support companies to go through the phases to get to an IPO. So, all the young entrepreneurs that they were scrambling to raise capital, what they do is they get tired and they'd sell at 50 or 60 or $70 million. Here, we've got a company that has been able to work in the private. They got lots of capital from guys like Omer's and Bessemer, some big names. And then they've had the time to get to that scale to go public. That's the most important kind of indication that this gives. Should give confidence to other young entrepreneurs and young startups to say, stay with it and get to that size as opposed to selling early, which is what we've seen in the last 10 years.
We see too much of. I guess the only other trend that you might point to in Canada is that you get companies that get early success like this, big success, and then something happens. Either they don't kind of manage to the next level or they sell out.
Well, look, we not just not small companies, we see Nortel and RIM and other problems we face, but we need to see, look, every tech company has to wake up every day and say they're going to die tomorrow if they don't improve or be dynamic around the thinking about the future. And that's the beauty of that business, but it's also what the type of leadership you need. And so, the problem we've had in the Nortel and the RIM situation and some of these other ones is that management just got complacent. So if we have great leaders, then it's about the business and the management that you really care about with this.
All right, I want to switch gears. This has been a long-moving process involving the Canadian Wheat Board, and that is the government, of course, ended its monopoly a couple of years ago, 3 years ago now, and now we have the sale of the Canadian Wheat Board to a consortium, including a group from Saudi Arabia and the U.S. Now, the question here I had when I first read this was not so much what becomes of this entity. It's what do the Saudis want with our grain? Is this actually a mistake? But do we need to worry about this at all?
No. I mean, look, food and investment in this type of space is a huge opportunity for many companies around the world and investors. So I'm a big believer in this sort of trend investing in agriculture and food-based kind of businesses. And I think that's what it is. It's an infrastructure play for the most part in the agricultural space. But I think the biggest thing is what it ultimately signals is, I mean, the government's been pretty open to saying, like, we're going to be privatizing, we're likely to do something. And if you actually look, since 2012, when they moved away from the monopoly of this Canadian Wheat Board, we've had a lot of problems in this space. So the quality of grains, quality of content coming from Canada has been weak. There's been a lot of complaints about it. And in fact, what's been happening is we've been seeing a loss of demand coming to Canada. They're moving to the US, they're moving to Australia. This hopefully will help create a better infrastructure, revitalize it, and maybe make Canada into a growth area from a wheat perspective.
It hasn't been clear to me, and I haven't really been able to get a clear answer from anybody either, on whether this change in the wheat board has been good for farmers or bad for farmers. And I think the answer is good for some and not good for others.
Yeah, I mean, I don't think it's good for the market, and ultimately, when you see your clients moving away from you, it's bad for farmers, and that's really it puts a bad reputation. Our reputation in Canada has actually weakened, and that's been an unintended consequence of this movement. Although you'd think that it would actually, an open market would be better, but it actually has resulted in something worse.
Thanks, Som.
Great to be here.
Some dogs have jobs that are tough, like sniffing for drugs or helping police make arrests. And then there's the dog that has one of the best jobs in the world. Check out what we crowdsourced.